How's it going, everyone? It's Sam. I want to congratulate you because if you're watching this video, there's about a 80 to 90% chance that you are a Workhorse stock investor. And what does that mean? That means unless you bought literally at the very end of the day yesterday, you are up on the stock. So I don't know what's happening right now when you're watching this, but I'm filming this Thursday night. We have never seen a higher point in the stock than right now. If you've bought literally any time along the last however long Workhorse has been around, you have earned money on the stock. Today, I'm going to talk about how that kind of puts you in a position of power, and I'm going to give you what I'm planning to do with the stock, when I'm planning to sell it, when I am planning to sell it on the top end and the bottom end, and I'm going to give you my plan to go along. And I rarely use these words like always, like foolproof, like all the time. Those I think are words that are very dangerous because nothing is ever set in stone. But I want to say that this is almost a foolproof way. So I can't tell if there's anything that I'm missing here. Tell me in the comments below if you think this is foolproof, what I'm going to say. Now, before we get into it, I said a couple days ago that depending on how many people signed up for something, I would give away a share of Workhorse. And I'm definitely going to do that. So we had a couple people sign up for SoFi money, and this is something where it's kind of a win-win. So I'll just show you how easy it is right here. If you sign up with SoFi money, you can just click the link in the description. It'll be the top link in the description. It takes you to SoFi. They give you $50 if you deposit $500 or more. And then you also can get cash back, and they give you like a direct deposit bonus. You can just move it from your job to here. And I'll actually show you how many different offers I get from them. And you can turn this off if it annoys you, but they're giving away $135 worth of cash prizes. They give you $75 for setting up direct deposit. They also give you all different types of stuff. They can give you up to 10% cash back on some of your debit card purchases. It's a really nice way of earning some extra rewards. And they do give you about 0.25% APY. So if you guys want to support me and support this share giveaway, definitely use that link in the description. I would really appreciate it. And then you can make a little bit of money too. I'm actually going to come out with a video this weekend on SoFi money, a little bit more dedicated. But listen through to the end, because at the end of the video, I'm going to tell you how you can be entered to win this one share. And I'll be honest, I don't know what Workhorse is going to do price-wise over the next couple days. So if we get the USPS contract someday Friday, or if we get it someday or sometime on Monday and I haven't given out the money yet, I will give you the share price no matter what it is. So if it rides up to, I'll put a max of 100. If it goes over 100, then I will cap it out at 100. But if it goes up to $100, I will give someone $100 worth of that stock. So let's get into the video here. If you're new, please hit the subscribe button right down there. It really helps out the channel. We're so close to 9,000. Who knows, by the time you see this, we might be broken through that by far. And if you don't mind hitting the like button, I really appreciate that too. It pushes this video out to more people. So, Workhorse. If you have bought, like I said, you are in a position of power. This is the beautiful thing about owning a stock that's gone up. So for me, I've been buying along the whole way from about 15 all the way up to, I believe I bought at 22 maybe, something like that. But my cost basis is right below 20. And it's only this high because I bought the whole way. And I realize that this is a speculative stock, right? So we're at a share price of almost $28. This has just continuously gone up. And right now, it's all green. It's all awesome. But there could be hard times ahead. We don't know. So if you've bought in, like I said, you are in a position of power. You can make your decisions now for when you're going to sell or if you're going to hold on to it forever. So I am bullish about the stock. I think it's a good company. But honestly, if it gets overvalued, I will sell it. If it gets overvalued, I'll sell it. If we have bad news about the USPS contract, I'll sell it too, because I think it's going to take a big dip if we get, let's say, 0% of the contract, which I don't think is going to happen. But if we get 0%, I think it's going to dip a huge amount, maybe 50, 60, 70%. And if I want to, at that point, I'll buy back in after I've sold out. But right now, I have a really good situation where I am up significantly. You can see here I'm up 42%. And I have this plan for how I'm going to get out of the stock. So a lot of people have been asking me this. When will I sell? What do I think it's going to go to? Well, I've already talked about where I think it's going to go to. I've already put price targets on it. I've already talked about the short squeeze that could happen. The stock price could get sent up massively because there are a lot of people that are betting against the stock. And if people start to buy back into the stock, if the stock price goes up, then these shorts are going to have to cover and they're going to have to run back and buy the stock again, which will shoot the stock up in value. So I'm going to walk you through this. First of all, I'm going to set a stop loss at $21.60. So why am I doing this? Well, I've talked about not setting buy limits before, where if a stock goes over a certain price, then it won't buy. So I've done that before. I've made that mistake where I want to buy into a stock and I'm just trying to save a couple pennies and then it goes over that amount and then I'm never able to buy into the stock. But what I'm going to do is set a stop loss. So I'm going to set it to sell my stock if it reaches $21.60. Now, the main reason I'm doing this is we are up to $27, $28 right now. The only way that we can get down to $21.60 is if we fall 23%. Now, unless we don't get the USPS contract and it comes out that we haven't gotten it, I don't think we're going to drop that much. And if it drops just like 5 or 10% a couple of days in a row, I'll reevaluate it. I'll see why it's dropping. But if we drop massively like that, it's probably horrible news that's happening, right? So it's probably that we didn't get the contract. Now, why did I pick $21.60? Because that is 10% higher than my cost basis. Because my cost basis is $19.63. So that means that $21.60 is a 10% return. I feel like that's a pretty good return overall if we have bad news. So if this has been a terrible stock to invest in and it just ran up and it was a bubble and we get none of the USPS contract, I still got 10% in just a couple months. So the index funds typically return 8 to 10% a year, maybe 7 to 10%. And that is over a whole year. I've done this in maybe 2 months. So if I get out with a 10% return, I'm great with that. I'm happy with that. That's a good return for 2 months. So I would be happy with that. And that is the worst case scenario, right? So that's if we don't get the contract. Now, here's what I'm going to do if we have the stock shoot up in value. First of all, I'm not going to set a sell limit on the upside. So I'm not going to say, okay, if it hits $40 a share, I'm selling all of it. The reason I'm saying that is if we have that happen, let's say we get 100% of the USPS contract. Again, I don't think we're going to get 100%, but let's say it's 75 or 100 or something like that. And the stock price shoots up so quickly, there's a short squeeze. A lot of people are buying into the stock. It could shoot up, 500% in a day. Who knows? We've seen things like that happen. We've seen crazier things. So if it goes up, let's say it goes up 200%, I don't want to sell off right when it's going up drastically, right? So if it's going up almost in a straight line, I don't want to have it set on like a pre-existing thought or a pre-existing guess that we're going to get part of the contract. I want to kind of feel it out, see if it starts to turn a little bit and level off. And, worst comes to worst, if we go up to $40 and then back down to 38 that same day, oh well, I lost a little bit if I didn't put that limit order in there. But what I can envision happening is it spiking that day and then I will sell out of part of my shares. So if we hit $40 a share, I'm going to sell out about 50%. So what does this mean? That means that I'm actually going to come away with some profit, and I'm also going to have about half my investment left. So I've essentially doubled my investment. I took away all the starting capital plus a little bit of interest if we hit $40 a share. And I think that's a win-win. I still get some of the upside of the stock. So if they continue to grow, that's awesome. But I also get my return back. It's kind of a speculative play. And at that point, I will have made 100% in the stock. That's a win-win. Now, I'm going to show you kind of how this breaks down with my numbers here in a second. But if we hit $50 a share, so if it goes up significantly from here, I'll sell 60% of the stock. Now, I realize some people might be like, oh, what the heck? It's going to go up to $80 a share. But let's be honest, there is always a price that someone should sell at. If some company that you're invested in tomorrow went up 100%, would that be rational? Well, maybe, maybe not. But at some point, there is an overinflated price. And doing what I'm doing here, I still have exposure to the stock, but I'm also taking some of the risk off the table. So if it gets up to $50 a share, I'll take out 60%, 60, 70, 70, 80, 80, 90. So how does that break down with my numbers, and why am I stopping at just 90%? Well, I want to keep some of the stock because, first of all, I like the company. If it goes up to $100 a share, I'll keep 10% of the stock. And part of it is that I like the company over the long term. Part of it is I want it as kind of a reminder, right? So this might sound a little bit dumb or something, but it will be a good reminder that due diligence and hard work and, investing in the stocks that you believe in is a good thing, right? That can pay off handsomely, and I will be able to see that cost basis. I'll be able to see that share price, and it will be great to take a look at over time. So what does this look like with my numbers? Well, I have a cost basis right now of $1,029. So if Workhorse hits $40 a share, I'll sell 50%. I will take out $1,000 and I'll have about $1,000 left in the market, about $1,048 if you want to look into it that much. But that gives me a nice little profit. That gives me maybe a 2% profit or so. And then it leaves $1,000 in the market, $1,000 to grow over time in Workhorse. If we hit $50 a share, I will take out 60%, which will actually give me $1,573, give or take. That will leave me with actually the exact same amount in the stock. So $1,000, $1,048 in the stock, and I will have taken $1,500 out. Now, again, I've done my target price video. I've talked about what I think it will hit, what the price prediction is. So if you want to see that, I'll link it here. But if we hit $60 a share, which I think could happen, especially if there's a short squeeze, and then I will sell 70%, it will give me a nice $2,200 return. I'll keep some money in the stock, so it'll actually go down a little bit. So as you can see here, as we get to higher prices, my amount in the stock will actually go down. So whether you like that or not, if we get a massive return, so if it goes up to $80, we 4x'd our money. I am great with that. I would be happy taking away $3,700 and keeping just $400 in the stock. Because from there, the market is only so big, right? It's an $18 billion a year market. At that point, they will have to have a massive market share and be able to control a lot of the business in the market. I think they could grow more than that, right? So they've talked about refrigerated truck market. They've talked about drones and all that. But I still have some exposure, and I can take my profits, put it into either other growth stocks or other stocks that I just see, going up 10% a year consistently. I am happy with my plan. I think this lets me have a little peace of mind that at the end of the day, worst case scenario, I get a 10% return. And that is just in a few months, like I've said. So let me know your thoughts below. If you want to be entered to win the share of Workhorse, whether it's $20 a share or $100 a share, put a comment in the description. Tell me when you would sell out, or anything that you want in the comments. I will take a look at this throughout the weekend. I'll let it ride for a couple days. So whether you were looking at this Saturday or Sunday, I'll let it ride through the weekend, and I will pick a random comment. I will reply to it and ask you for your Venmo or your PayPal or whatever we decide on using, and I will give you the money for whatever the share price is, maybe on Monday or something like that, maybe Tuesday. So thank you guys so much. I appreciate it. Thank you if you've watched to the end. Maybe that can be your comment. Say, I watched to the end, or, tell me your price target on Workhorse over the long term. Thank you guys so much. I appreciate it. Thank you for subscribing, liking the video, and checking out that link to SoFi Money. And I will see you in the next video. Bye.